So this morning in my Facebook Forex trading group, I posted a chart of the euro dollar where I was identifying a support level that we should be sort of paying attention to. And underneath that chart, a gentleman commented just essentially saying that he needs to learn more about support and resistance levels as something that he doesn't really know enough about. And do I have any videos, or do I know any videos? Can I point him in the direction of a video where he can learn more about it? So that's what's inspired this video right here. So Joseph, if you're watching, this video is because of you. So it has been a little while since I've posted a video on support and resistance on this channel here. I've sort of posted a lot more to do with strategies. Obviously, the last video that I posted was on candlestick formation patterns. But in terms of the real core, the real basics of technical analysis, it's been a little while since I've posted something like that. So it's about time, and that's what we're going to do in this video. But before we do get into the video, as always, please make sure that you are subscribed to the channel. So if you haven't subscribed, hit that subscribe button and then hit the bell so that you get a notification as and when I release a new video. And if you're interested in trading the financial markets and profiting from these markets in any way, then you really want to pay attention to these videos, because the stuff that I show you here is the stuff that I use each and every day. And believe me, I've got a hell of a lot of experience in these markets, been trading them since 2005 now. I've done everything from, trade my own book to trade an investor fund, and now again, trading my own book, and also obviously teaching you guys to trade the markets as well. And I do all of this with my brother, who you may have seen. And I'm we're sort of like two peas in a pod, if you like. So he does more of the fundamental analysis, and I do more of the technical analysis. So this is my forte. This is what I love. And this is what I'm going to show you in this video right here, as to how to sort of really read the charts and make the most of the opportunities that the charts present at support and resistance levels. So when we talk about support and resistance levels, it's first of all important to understand that these levels are things that professional traders use throughout the land. So literally all across the globe, on trading floors and in hedge fund offices, you're going to find traders looking at support and resistance levels, regardless of whether they subscribe to fundamental analysis or technical analysis. Because even if you are a fundamental trader, you're still going to want to have some sort of rule for getting into and getting out of your trades. You're still going to want to be aware of these levels, even if you don't place as much weight on them as technical traders. And then if you look at technical traders, obviously we're going to be paying attention to them, because from a technical perspective, that's where we can identify areas of the chart where something's going to happen. And that's what we're trying to do as traders. We're literally trying to identify areas of the chart where we're going to get a little bit of volatility, because volatility is what puts profits in our accounts. Okay, so it's very, very important. And even, for people looking at algorithms and high frequency trading and things like that, what do you think they're doing? They're looking at these levels because they know their orders are going to be clustered around these levels. So they know that they're going to have the liquidity around these levels to be able to get into and out of the market very, very quickly. So they are very, very important levels. And it's something that, as I've just demonstrated, regardless of the sort of analysis or the sort of approach that you have to trading that you subscribe to, you're going to want to understand support and resistance levels. So let's jump over to the chart right now, and let's look at how we identify them and how we can look to trade them and profit from them. So if we take a look here, we've got the dollar yen chart, but this works for literally any Forex pair, any currency pair, any stock, any equity, any financial chart. These things, even cryptocurrencies, the concepts I'm about to show you here will remain the same. Support and resistance levels work. They work all over the place, and it's something that you really need to pay attention to. So first of all, let's identify what we consider to be a support and resistance level. So a support level is an area on the chart, like here, where the market has traded down, and then it's turned around and it's traded away from it. Okay, and what's happened there is that the market has then created a support level. So that's an area where the sellers were in control, then suddenly the buyers come back into the markets and they push the market higher. Okay, a resistance level is exactly the opposite. So a resistance level is an area on the chart where the market has rallied, so the buyers have been in control, and then they get to a point where the buyers don't really have the conviction behind their trades, and they either want to take profits, or sellers will get involved and they will push the market back down. So resistance level think of it like a bit of a ceiling, and support level, think of it as being a bit of a floor. Okay, so your support levels are in the bottom, so underneath the price action. Your resistance levels are on top of the price action. All right. Now, one thing that you have to remember when you're identifying these levels is that whilst if you drop down to a different lower time frame, then this might look like a resistance level. Okay, so it's going to be relative to the chart that you're trading. Although I would always say that you're going to put more weight on the support and resistance levels that you get on the higher time frames, i.e. these big support and resistance levels over here, than you would on these little mini ones on the smaller time frames. Okay, but if you're just looking at one chart, so let's say we're trading the daily charts, I'm only going to be interested in the big levels. These little things here, for this particular chart that I'm trading, I wouldn't consider this a support or a resistance level. This is just the price doing what it does, which is fluctuating, ebbing and flowing up and down to a point where it does reach a resistance level, and then the same on the downside to the point where it does reach a support level. Okay, so these little things here, I wouldn't consider these gyrations as support or resistance levels or something that you necessarily want to pay attention to. Okay, so the next thing, once we understand how we identify them, is, well, how do we use them? And to best demonstrate this, I want to zoom out of the chart a little bit, and I want to show you how support and resistance levels, they interact with each other. Okay, so if we go, this is a daily chart, and what I'm going to do here is that we can see that the market has sold off all the way down here. Then we have a big move to the upside, right? We can see that. So what we would do is we would remember as technical traders that the markets, they have a memory. Okay, so let me go back to this point in time, zoom in again. So the markets have a memory. So once the market did this, I could then put in a support level, so a horizontal line of supports. And then what I can say to myself is that the next time the market gets to that level, I'm expecting something to happen. For the most part, if it's been a while since it's been at that level, I'm going to expect some sort of a bounce. It might not be a big bounce, it might be a temporary bounce, but I'm going to expect something to happen at that level. So, for the price to essentially potentially come down like so, and then push off a bit. It might break down eventually, but I don't think that it's going to do it without any sort of support to start with. So then what we do is we have it on our charts there, and then we wait until the market gets down to the level. And sure enough, so this level was printed in January 2019. If we then move forward to August 2019, the market comes down to that level, and what happens? It bounces off of that level. So what you would do if you were trading these markets is you would say, well, I would look for some sort of bullish price action. Whatever strategy you're using to get into the markets, you would wait for your entry strategy in and around that particular level there to trigger. Then if it happens at that level, you know that it's happening for a reason. Okay, so that's what you do. You'd wait for an entry strategy, and I'm not going to go into that in this video here. I've got a few other videos where I do go into other strategies, and I can do other ones in the future, but it would end up being like an hour-long video if I try and give you entry strategies here as well. But just say that when it gets down to that level, oops, got rid of it. When it gets down to that level, I'll be looking for my entry strategy, whatever that may be, to give me a buying signal here. Or if the market breaks through the level, so if it's under the level in and around here, then I would look for a sell opportunity. So maybe some sort of a momentum trade. And obviously you've got to look for the price action that would meet that particular criteria. So let's go back in here. Let's put this level in here again. And if we zoom out, what we want to do is look at how the market interacts. So actually, I put this support level in based on this price action here in January. But if I scroll back on the chart, so let's say I was trading at this point in time over here. Okay, so looking at the 26th of March 2018, I could have put the level in here then and said the next time that it comes back down to it, I'm going to do something, which happens again on the 3rd of January, and then again over here on the 29th of August, okay, or just before then. So the point is that the market has a memory, and we use support and resistance levels to essentially sort of help us identify where we want to trade in the markets. Because when you're looking to make money trading, you don't want to just look to buy, sell anywhere on the charts, because it doesn't make sense to do that. You have to have a reason for doing that. Now, it's not to say that you couldn't buy the markets once it's bounced off of this level, but buy it up here. But you would be buying it for the reason that the market has bounced off of the level, not just arbitrarily because you think the market's going to move in a particular direction. Okay? Excuse me, my throat here. So, this stuff plays out all over the charts. If we zoom out of the chart here, you take a look, you can see that over here, we've got a resistance level. Down here, we've got a support level. Okay, the market doesn't quite get down there on that occasion, but it does later on. It bounces from it. If we had this resistance level in here, it bounces from that level, bounces from that level again, and it happens all over the chart. And I'll tell you a story about how professional traders, how they use this day in, day out. We've got a friend of ours that at the time he was trading for JP Morgan, and this was during the time of the financial crisis, right? So we're going back to this time here. We can see that the yen chart was actually the dollar yen. I've got a separate story on that, which I'll tell you at another point. But in any case, the dollar yen chart here, you can see that it was basically moving down and down and down. And what was happening is that we had a downward sloping trend line in here, sort of keeping all of this price action in place. And he literally had a strategy for a period of time. I forget exactly where, but it was in and around this sort of area here, perhaps, where he said, you've got a big resistance level in at that point there. All I'm going to do is I'm literally waiting. Oops. So here we are. I'm waiting for the market to reach that resistance level. And when it reached that resistance level, I'm going to look for a sell opportunity. Okay, and what happened was it came up towards that level, he sold. It came up towards that level, he sold. Came up towards that level, he sold again. Okay, it wasn't really much more complicated than that. It was as simple as that. I'm just looking at that resistance. Every time the market hits 84.50 in and around there, I'm looking for an opportunity to sell. And that's what professional traders do all over the world. And if you want to make money as a trader, whether you're trading the Forex markets or you're trading futures or whatever it is, you want to be paying attention to support and resistance levels, because what it will do is it will increase your strike rate, okay, because it will allow you to trade at areas of the chart where something is actually going to happen, as opposed to just trading for the sake of trading, just trading in the middle of nowhere. So that will increase your strike rate alone. And then once you start to understand what happens at these levels and why you get reactions to these levels, which is the fact that you have orders clustered in and around these levels, and you understand the dynamics, then you'll be even more profitable. Okay, but I'll go into the dynamics of what happens at these levels in another video. I think this one here is a good one just to kind of, give you a bit of an introduction to support and resistance levels and how to use them and why they're important. In another video, what I will do is I'll go into the dynamics around those levels. So why is it that we're actually seeing buyers come in at a particular level? What is causing the market to bounce at those levels? All of these things here are important to understand. It's like I said in the candlestick video that I posted a few days ago. Essentially, just you have to go beyond the point of just sort of saying, oh, this is a support level. I understand that this is a support level. Okay, you have to understand, why is it a support level? Why is this a resistance level? What happens at these levels? What's the battle that's going on? What's the dynamics that's taking place on that chart? And when you understand that, then you'll be in a much better position to be able to make money in the long run. Okay? So I hope this video was useful to you. If you did like it, please make sure you give us a thumbs up. Please subscribe to the channel, hit the bell so that you get a notification as and when I release a new video. And I will leave you with that. Say thank you very much for watching, and I will catch you in the very next video. Take care now.